Let's take a look at some charts, figures, and graphs on Ethereum Classic for Brave New Coin. So I haven't talked about ETC in months, ages, eons. It was a coin that was left for dead. Really all you need to know about the earlier days of ETH versus ETC is that it was a dispute regarding a chain rollback related to a DAO at the time that got hacked, and I think it accounted for 60% of the ETH supply. Don't quote me on that. It was high. It was ridiculous. Basically, a bunch of people threw money into a DAO. It got hacked. So the question was, what do we do for the ETH people, right? What do? Do they roll it back? Do they make it not immutable? Or do they just let the chain be the chain? And ETC said, no, we're not going to adopt this rollback. We are going to move on, push forward. What happened, happened. And ETH adopted the rollback. Early on, hash rate, it's hard to see this. Hash rate was probably comparable early on. I'm talking early on. In 2016, it got close. 2017, it got close. Hash rate is a good way to measure at least mining behavior around forks. You know, what percentage hash rate was ETC versus ETH at any given time. That's one way to measure who's winning the race, right? Where do the miners believe value is? That's just one metric to use, but it became kind of clear in 2017 and 2018 ETC wasn't going to be it as far as the popularity contest. And although ETC says they will never go proof of stake, they have been 51% attacked several times. I don't even know how many at this point. Several times in 2020. So much so that they had to do something. And they finally adopted the Thanos fork, is what they called it. And according to the Wikipedia page, this is important to look up because, you know, if you're like me and you don't look at most of this stuff all of the time, you don't know what's going on. I remember hearing about this, but I don't remember exactly what happened. I thought they were going to switch their mining algorithm, which they didn't actually end up doing. They doubled DAG size. At the end of the day, it is a way to be more ASIC resistant and basically prevent yourself from being low-hanging fruit for 51% attacks. So since then, to my knowledge, they have not been 51% attacked. They have a total of 560 nodes, and going forward, we can just look at this as any other proof-of-work coin with the assumption that the 51% attack days are over, hopefully. It's hard to want to buy and hold a coin that's been 51% attacked unless they do something about it. Not that I'm advocating buying ETC right now. I will likely never hold any for the entirety of my life, but just keep that in mind. The history is important, how it got here and what it is. Now, if proof of stake fails for ETH, maybe ETC's the one. I don't really see that either, but it's kind of like a hedge against chaos as far as things going wrong with ETH. And if you look at some of the ETC propaganda, you know, you'll find stuff like this: no foundation, no pre-mine, blah, blah, blah. I mean, some of this stuff is flat out lying, and some of it is borderline. Really, it was Barry Silbert who kind of picked up the pieces of ETC early on and said, we're gonna try to fund this with millions of dollars. There's the ETC co-op. There's all sorts of other ancillary, not foundation, but foundation type stuff. Just be aware of that. I'm not going to go into it, but it's important to acknowledge its existence. And if we look at Grayscale, DCG, Barry Silbert, we look and the ETC trust is the third largest by AUM of Grayscale, even bigger than LTC. I forget the exact figures, but I believe they give a percentage of fees back to the developers for ETC to encourage the ecosystem. So all of this kind of, to me, doesn't matter. I mean, I'm happy people are getting paid for developing, and I'm happy there's an alternative to ETH should ETH fail, but I don't really think any of that's going to move the needle. It's going to keep it sustained and existing. I don't think any of it's going to be super, super important, you know, fundamentally long term. If you look at the Grayscale ETC trust discount or NAV, it's currently negative 5%. This is just important because, like the BTC trust, if it's extremely negative on the discount, then you have issues with redemptions. You have people complaining who own a bunch that this isn't fair, and then they have to issue buybacks. So always keep that in mind. Anything that's big and listed here, does it have a premium? Does it have a discount? How does that affect spot markets? That sort of thing. And just going along our merry way on the typical metrics for on-chain stuff, if we look at ETH versus ETC inflation, it looks like their values for ETC inflation dropped off beginning of April, but still it's higher than ETH. And when your inflation's higher than ETH and the party's happening on ETH and not ETC as far as DeFi is concerned, I mean, I didn't even really research DeFi on ETC. I'm sure it's happening to a minor degree, but when people think of DeFi, they don't jump to ETC. That's just kind of how it is, right? So for me, the biggest potential upside again for ETC is going to be when ETH switches the proof of stake completely and disaster strikes, if it does, right? Like that's when ETC may be able to pick up the pieces, but I just don't see ETC overcoming ETH anytime soon. If you look at the transaction counts, they've been all over the place. A lot of this is the nice hash mining 51% attack related. This is a great picture what I'm talking about when I see stuff like this where it's just not organic. It's very weird. It's extremely volatile, the transaction counts, right? But since December last year, in this range, it's been more reasonably, at least tighter as far as the volatility and the transaction counts. It isn't like this crazy percentage spreads all over the place on chain. And if we look at average transaction values, very near an all-time high as price hits an all-time high. So no real surprise there. Fees versus ETH are a sliver of a percentage compared to ETH. So they've got that going for them. Block sizes in the fill are next to nothing. I mean, compare that to ETH. Just for funsies here, let's take a look. What is the ETH block size versus versus ETC? I mean, this is another measure other than mining. Where's all the stuff happening, right? Is it happening on ETH or is it happening on ETC? And it's very clearly not happening on ETC relative to ETH. So it's understandable that ETC is priced what it's priced. It's understandable that relative to ETH, ETC hasn't really done much. Look at NVT, which is going to be massively skewed because of this 51% attack stuff. It's hard to even look at any of this seriously other than kind of the last few months. And active addresses have been increasing. NVT has been on the decline. That's what you want to see. So it's no surprise price is where it's at. And if we switch to technicals, most of these charts are Poloniex. And if we pop on the MA multiplier, this is the 183-day EMA. It's the 365 on the 12-hour. And then 5 times that in the red. And historically, ETC has spent most of its life in the buy zone and only really tapped the overbought zone once. So again, buy zone down here, sell zone up here. Currently, it's projected at 58, and that's going to keep moving up day over day. It'll move up more if price slows down. But if price reaches 58 or near that very quickly, then that will be the top very quickly based on this metric. Not a lot of backtesting for this specific coin or ticker, but based on all the MA multipliers I look at across stocks and Forex and crypto, you just don't see mega continuation past this level in general. I mean, ever. It just doesn't. It's just too much. Basically, it kind of is a way to see how overbought we are, yes, but how rich are people who bought the bottom, right? Like what is the average buy-in? Essentially the green. And then 5 times that, a 5x from there, is usually enough to the point where sellers overcome buyers at that point. If you look at daily 5200, VPVR, yearly pivots, and RSI, it had this stereotypical like Coffeean-esque accumulation zone, much like all the other zombie coins. OMG, NEO, XMR, not a zombie coin, but had this as well. LTC had this as well, and to some degree. So it's no surprise that it's experiencing these series of markup phases. EOS as well has this. And as everything else gets more expensive, we see more and more rotations into things that look cheap, but maybe don't have a reason to actually move to these levels. And maybe I'm just overly bearish or uninformed on the fundamentals of ETC, but I don't see it as something that should be at the price it's at. To me, it's overpriced because it hasn't proven itself as something that needs to exist. That's kind of where I sit. That may be a bit harsh, but it's the truth. It's how I feel deep down. That's my subjective opinion. But technicals, again, they look fine. Trend metrics, they look fine. No surprises here. Just continuation after continuation on the cloud. Bullish TK cross, Kumo breakout, bullish TK cross, Kumo breakout. The usual. Exactly the stuff you want to see. I would be watching for a bear div up here on this most recent all-time high. ETH-BTC had several months of bullish divergence type of action with a W double bottom. A lot of alts, again, had this pattern along with the coffee and accumulation type stuff on the USD pairs that had this W on the BTC pairs. Some of these have broken out, like XRP, like EOS, like LTC, like OMG, NEO, Tezos hasn't quite broken out yet. But this is why if you're trading this stuff, you trade all of these the same. If it breaks the 200, if it breaks the cloud, if it breaks the horizontal of the W, W for win, W for win. That's all you need to remember. You're bullish, you go long, you hold, whatever. This looks fine for continuation, honestly, and is maybe the most bullish it's looked in 3 years' time. I mean, it's incredibly bullish right now for ETC, and if we zoom way out on the 3-day and look at the 800-day EMA for ETH-BTC, historically it's never really been above kind of where it's at now. The 3-day cloud hasn't been bullish since 2017. I mean, this is unprecedented type of bullish action from something like this. Last time RSI was this bullish was early 2020, and before that, 2017. So it's kind of in unusual company relative to backtesting on where it sits here. And if I was trading this, I would wait for this bullish cloud and kind of see what happens from there if I was looking at the high time frames solely. Otherwise, you're trading this W and you're kind of happy with what you get at this point in time. You can see here we have this Adam and Eve that broke up as well. So it's no history, or it has a history of doing stuff like this and then going nowhere. So you have to be careful of the siren song of the altcoin bag rotation. And then I can't talk about ETC without talking about the ETC ETH chart on the daily. It again had this capitulatory mega bleed that you only see when things are, at the bottom, which is what we got. Eventually, the bears just run out of steam, regardless of fundamentals of ETC versus ETH, right? Just technicals. People start rotating into this stuff. You get this W-type double bottom. It's breaking up. You're going to get a 5200 cross soon on the daily. And I like anything back in this range as far as the final destination for ETC ETH. So overall, fundamentals for me on ETC will forever be marred by the myriad of 51% attacks, which at this point look to be in the rear view because they've adjusted how the chain works fundamentally. OnChain metrics look okay relative to price. It's not going to beat the pants off of ETH anytime soon, but transaction counts and active addresses since January are way up. Technicals look bullish and closer to toppy at around 58 to 60, and it's probably not going to outperform ETH over the long term, but does look pretty decent against BTC in the short term. Lastly, I'll just mention the ETH-BTC Fund on Enzyme.finance, non-custodial portfolio management tool. You can send BTC or ETH, and it sits in a smart contract, gives me the ability to trade similar to a copy trading type of system, and everything's transparent. AUM, allocation, trades, what I trade when. This all happens through DEXs, so I pay gas fees, you don't, for all of the trades. And we also have a managed DeFi portfolio with 15 to 20 DeFi coins, which I would classify as the blue chippers of the group. These are no rugs allowed, just straight winners here relative to everything else. And again, you can see deposits, withdrawals, no mins, no max. You can get in and out whenever you want. You see all the trades I make and when and where. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.